Hello and welcome back. Joining me again today is Nicole Sandler, Chase Buchanan's Spain-based qualified advisor. Nicole has been a guest with us before, sharing valuable insight into the financial matters that affect British expats, as well as anyone else who's considering Spain as their next home. Nicole, great to have you back.
Thanks, Mark. It's really great to be back. It's a pleasure to be here.
Good to see you. Well, in this episode, the concept is a little different. Instead of the big picture, the broader financial themes that apply across the board, we wanted to focus on something we often mention but rarely get to explore in detail. The fact that Spain is made up of 17 separate regions and each one operates with its own set of tax rules, allowances, and quirks. And this has come up in our previous talks as well. So I think we'll just go into a little bit more detail today. Yeah, we often talk about how important it is to consider the unique laws of each region, both to stay compliant and to make sure you are taking advantage of every tax benefits available to you. But until you actually sit down and compare them side by side, it's hard to appreciate just how different they are. So today we are taking a trip around Spain, a tasting tour, if you like. We won't deep dive into each region, there simply is not the time, but we want to give each region a moment in the spotlight with a single telling question. There will, of course, be plenty more questions you may have, which is exactly why a free initial meeting with one of Chase Buchanan's advisors is so valuable. But for today, this is the tour. 17 jurisdictions, 17 questions. Nicole, are you ready?
I'm ready. Vamos.
Great. Well, let's start in the south. Andalusia is famous for its 99% inheritance tax reduction for family members on estates up to 1 million euros. But how does someone actually qualify for this?
It's a good question. Andalusia offers very generous inheritance tax relief for close family members. So that usually applies to spouses, children, parents, and also grandparents, direct ascendants and descendants. There's also a 1 million euro exemption, and it's only the excess over that has the tax, which there is then a 99% relief on. So it's a very favorable inheritance tax region. In practice, the key is ensuring residency status, family relationship documentation is in place, wills, asset ownership, and records are all properly structured and also evidenced. So many expatriates here just assume that the relief applies automatically, but it doesn't. You do need to have good estate planning and correct paperwork in place, which is really essential to make sure the beneficiaries receive the appropriate reductions.
Fantastic. No, good to know, Nicole. And obviously, Andalusia is one of the most popular areas of Spain, with the Brits looking to move over. We're moving north now into Aragon. On the surface, a 500,000 euro inheritance tax allowance sounds generous, but for a typical British estate, is it actually a disadvantage compared to neighbouring regions?
Well, actually, for children in Aragon, inheritance tax is virtually eliminated in many cases because they do offer a 99% reduction. And then other relatives, such as spouses and parents, can also benefit from quite generous reductions as well. So, although it's less than some neighboring regions, it's still a relatively favorable part of Spain from an inheritance tax perspective.
Staying up in the north, we move on to Asturias. This region applies a top marginal income tax rate of 50%. But what does that mean in practice for a high earning expat or someone taking a large pension drawdown from the UK?
Sure. So, in general, pensions in Spain are typically taxed under the general rates of income tax bands, which can range anywhere from 19% up to around 50% at the top end, depending on the region and, of course, the level of income that you have. Asturias is slightly higher tax than some other regions, although not excessively so. For high earning expatriates or those taking large UK pension drawdowns, the timing and the structure of withdrawals becomes very important, as larger withdrawals can push individuals into much higher tax brackets. So, just understanding your pension income and how that will be treated in Spain is really essential just to avoid any unexpected tax liabilities.
And just quickly on that, the tax rates, I mean, you're saying it's not much more than some of the other areas. I think, is it 47% roughly in some of the other areas, or just a
It
few
is.
percent?
It's
Yeah.
it can be around 47% up to as high as 54%,
Okay.
depending. So on average, around 50%.
Fantastic. Brilliant. Okay, well, let's skip over to the Balearic Islands now. They've recently raised their individual wealth tax to 3 million euros, which sounds like a major win for residents in Mallorca or Ibiza. But how does that interact with the national solidarity tax that occurs in the Balearic Islands?
Sure, and this was very welcome news in the Balearic Islands. It happened only in recent years because it means now there's far fewer residents there now affected by wealth tax. It does tend to attract high net worth individuals as well to the islands. So it's basically anyone that has net assets over 3 million euros now that will be affected. However, so that was wealth tax. Solidarity tax is a separate tax and it's a national tax, unlike wealth tax, which is more regional. And solidarity tax was introduced to ensure that high net worth individuals still pay a minimum level of taxation, even in regions offering generous exemptions like the Balearic Islands. The tax now appears to be a permanent measure as well. It was temporary, it now seems to be quite permanent. And although the solidarity tax technically starts at 3 million euros per person, you do have allowances and reductions like wealth tax. So it's 700,000 euros plus a main home allowance of 300,000 euros. So in practice, you're not really affected by solidarity tax unless your total net wealth exceeds 4 million euros.
Okay, good to know. And what do you know much about the reasons that was sort of brought into place? You mentioned there very briefly about less people buying in the Balearic Islands. Is that mainly because prices have maybe sort of gone up over the last few years, and this is just going to help people attract more people to Mallorca and Ibiza?
Absolutely. It's
Yeah.
to attract and to retain high net worth individuals living there, trying to make it as inviting as possible from a tax perspective.
Fantastic. Okay. Well, let's jump on a plane and head south down to the Canary Islands. The Canaries operate under their own indirect tax system. I believe instead of the standard 21% Spanish VAT, they apply what's called the IGIC, which is just at 7%. What does that mean in practical terms for expats living there or running a business?
Sure. The Canaries, for me, is very interesting from a tax perspective because what we're talking about here is essentially a goods and services tax. So the Canary Islands have very much their own tax regime. Instead of Spain's standard 21% VAT, goods and services tax, in the Canaries, it's as low as 7%. So for expatriates, that can help reduce the overall cost of living, while for business owners, it can create a more tax efficient environment compared to the mainland of Spain. And it's one of the reasons the Canaries in general are just so attractive for international residents, but also for entrepreneurs.
That's really interesting. I didn't know that about the tax, and I can see now why it's such a popular place for Brits to go to. Moving on to Cantabria. Now this offers 100% wealth tax relief for net assets under 3 million euros. What does that mean for someone considering it as a base, and what should they be mindful of?
Sure. So in Cantabria, whilst there is no wealth tax, there is still the national solidarity tax that we've talked about, which needs to still be considered here. So that, if you remember, is a tax on global assets in excess of 3 million euros per person, plus you also have the allowances. So it is a rather favorable region. However, the nuance there with Cantabria is that net wealth in excess of 2 million euros still needs to be reported purely just for information purposes in that particular region.
Lovely. Thanks, Nicole. Moving on to Castile and Leon. They also offer a 99% inheritance tax reduction. But unlike some region, this one extends beyond just spouses and children to other close relatives. How significant is that broader scope for expat families with more complex structures?
Sure. So this region is attractive because, like you've said, it does have the 99% inheritance tax reduction, which broadly applies to close family members, including also spouses, children, parents, and grandparents. So for expatriate families, this can create quite significant inheritance tax savings if you do have proper estate planning in place, and particularly where Spanish property or investment assets are involved.
Fantastic. Okay. Moving on to Castilla-La Mancha, often described as the least competitive tax system in Spain. What does that actually mean for British retirees thinking about settling there?
Sure. So it is often viewed as perhaps less tax competitive because it generally offers fewer regional tax reductions than other regions and fewer allowances, particularly when it comes to things like inheritance tax or wealth tax planning. However, for British retirees, that can also mean a higher overall tax burden. It just really depends on your income and your asset levels. However, that said, this region, the tax side of it is really only one part of the overall decision because it still offers very excellent value for property in that particular region, a much slower pace of life, and it's very authentic Spanish living. So the whole picture needs to be taken into consideration and not just tax.
Yeah, I think that's a really good point. And, we often talk about on the TV show about compromise. And I think that's a prime example there when you're looking at tax as well. Moving on to Catalonia, beautiful part of Spain, hugely popular with expats, but has a very low inheritance allowance of just 100,000 euros. Why does this create such a serious trap for British expats, particularly those passing down coastal property?
Sure, and like you say, it's such a hugely popular region for many Australians as well. Um, it can create an inheritance tax problem for British expatriates because the regional allowances are relatively low compared to other regions, and it doesn't look like it's going to change anytime soon. And in saying that, the coastal property values are often quite high.
Yeah.
So many families unknowingly end up with estates far above the tax-free thresholds, particularly because property has also grown significantly in time in that particular region. So, without proper planning in place, children or beneficiaries can face substantial inheritance tax liabilities, which is why succession tax and asset structuring is just very, very important, particularly in Catalonia.
Yeah, that's a good point, and I'm sure, as we said earlier, we're not going to deep dive into all of these regions, but I'm sure once people start to have a chat with yourselves, there'll be ways around that to try and avoid such a big sort of inheritance tax bill at the
Yeah,
end there.
absolutely.
Moving on to Extremadura, I think that's how we pronounce it. You'll probably say it better than me. They're doing something quite different. They're actively offering relocation grants of between 8 and 15,000 euros for digital nomads. How can a British remote worker actually go about applying?
This is a really interesting region for doing that, I think. And that you're right, they're trying to attract remote workers and digital nomads, which we now have a visa for over the past few years, by offering relocation grants with higher amounts available to those moving to even smaller rural areas in the region. So, in practice, applicants need to register as residents, they need to prove that they work remotely, and they need to commit to remaining in the region for a minimum period. And the process usually involves applying through the regional government with supporting documentation such as residency certificates, proof of employment, and evidence of the relocation. I would highly recommend to use a company that specialises in this, which we have contact details for. And the grants certainly can help you, I think, with the initial setup costs of moving to that region. However, it is still important to understand the wider tax residency and planning implications before you do relocate.
And just off the top of your head, is this the only region of Spain where they would offer a grant, or are there others as well?
It is the only region, as far as I know. There is actually a freeze at the moment on it because there was quite an influx of
Yeah.
applicants. So there's just a freeze for the time being on new applicants for the grants. And it's just a watch this space area for when that freeze will be lifted.
Yeah, that'd be interesting to see if others follow suit as well in Spain. Moving back up north, up to the northwest is Galicia. This is quite an interesting one for me. The region applies a 1.5% stamp duty on property purchases, which is obviously a lot lower than a lot of the other regions in Spain. For an expat buying a retirement home there, what is the impact of that?
Sure. So In general, first of all, in Spain, the taxes paid on a property purchase depend very much on whether the property is new or whether it's resale. So resale properties are usually subject to something that's called a property transfer tax, and that can range anywhere from 6% up to 10%, depending on the region that you live in. While new build properties will attract VAT plus this stamp duty that we're talking about. And stamp duty usually ranges from about 0.5% up to 1.5%. So Galicia does sit towards the higher end of the scale. It does increase the upfront cost of buying that type of property, but in saying that, the region offers really good value compared to other parts of Spain. And so for many expatriates, lower property prices and a lower cost of living can definitely offset the higher initial transaction cost when purchasing the property.
Yeah, I think that's a good point. Yeah, I mean, a higher stamp duty, but a lower cost of the property. Yeah, can still be less than what you'd pay for a lower stamp duty, but higher property prices elsewhere. Moving on to La Rioja, famously generous with 99% inheritance tax reduction. But how do these reductions actually apply when the assets being inherited are UK domiciled rather than Spanish?
Very good question. And just the first point of that is in general in Spain, succession tax, which is inheritance tax here, applies if the asset is physically based here in Spain or if the beneficiary, the recipient, lives here in Spain. So La Rioja is one of the more generous regions in Spain for inheritance tax. It has significant reductions that are available for close family members. However, for British expatriates, the important point here is that Spain taxes you on your worldwide income. So it's not just the Spanish assets. If you live here and you inherit from the UK, then you're subject to Spanish succession taxes because you live here in Spain. So this means things such as UK investments, property, bank accounts can still fall within the Spanish inheritance tax system. And the good news is that the UK and Spain certainly do have provisions to help prevent double taxation. So careful planning is really required in this space, and it's essential to ensure that your assets are structured efficiently and that the available reliefs are certainly utilized.
Moving on to the centre of Spain, and Madrid has long been a magnet for high net worth residents thanks to its 100% wealth tax exemption. But with the national solidarity tax, which we spoke about earlier, now in play, has Madrid lost its competitive edge, or is there still a genuine reason for high net worth expats to base themselves there?
Madrid still remains highly attractive, I think, for high net worth individuals, despite the introduction of the national solidarity tax that we've been discussing. And while the regional 100% wealth tax relief has been partially offset for very wealthy individuals, I think that Madrid does continue to offer a very favorable overall tax environment compared to perhaps other parts of Spain. So, beyond tax, which we always need to consider as well, Madrid also attracts international residents because it has really fantastic business infrastructure. It's got international connectivity, lifestyle, and a very strong expatriate community all over Madrid. So, for many high net worth individuals, the decision is no longer purely about just avoiding wealth tax. It's about the wider financial and lifestyle advantages that Madrid has to offer.
Yeah, I get that as well. I mean, Madrid is so very much different to the coastal towns as well, and I can see why a lot of those high net worth expats go there, base themselves in Madrid. Well, moving on to the east coast now, and we're going to head off to Murcia, which is becoming extremely popular with the Brits at the moment. Lots of building going on there, lots of people looking to move as well because the prices were a lot cheaper than some of the other coastal towns. Um, Again, Murcia has got a 99% inheritance tax reduction for spouses and children. What documentation does someone actually need to make sure they secure that relief when the time comes?
Sure, and I agree. Murcia is somewhere that I never used to talk about with expatriates moving here, and it's a very popular area now, very well connected back to the UK, and like you say, very good cost of living as well. So it does also offer generous inheritance tax reductions for close family members. But it is important that the beneficiaries can properly evidence this and the relationship and the ownership of the assets that are involved. It's so important. So in practice, this usually means having an up-to-date will in place, death certificates, asset statements, residency documentation, and translated legal documents when it's necessary. The other important point to note is that timing is also critical here because Spanish inheritance tax declarations generally need to be filed within 6 months of the date of death, which moves very quickly. So I think one of the most common mistakes I see in this area is that expatriates will assume that UK-based documentation alone is sufficient, and it's not. In reality, in Spain, the authorities here will often require formal translations, apostilles, and local compliance procedures to be followed to secure the reliefs that are available in the region.
Fantastic. Good to know. Thanks, Nicole. Moving on to Navarre. It's one of only two regions in Spain that operates under the foral tax system, giving it significant autonomy from national rules. How does that actually translate for an expat? Is it a help or a hindrance?
That's right. So this region has a very unique foral tax system, which means it has greater control over certain taxes compared to other Spanish regions. So for expatriates, I think it can create both opportunities and perhaps some extra layers of complexity at times. In some cases, this region can offer very favorable tax treatment and more flexibility around local taxation. But then the rules can also differ significantly from the standard Spanish system. So in this case, again, it makes the advice, professional advice, even more important than ever because in practice, it tends to suit, I think, expatriates who are planning to settle here for the long term and who are prepared to structure their finances carefully within more of a specialized and regional framework.
Fantastic. Well, we're seeing a real trend here between the different regions and the importance of getting that advice early when looking to move to Spain. Well, next we're going to go to the Basque country, which is fascinating because each province within the Basque area sets its own rules. So the wealth tax threshold in Biscay, where Bilbao is quite different to those in Gipuzkoa, where San Sebastian is. How does that create a real tax discrepancy for expats moving between neighbouring provinces?
Sure, the Basque Country in general is so fascinating for me. And yes, you're right. It is a very unique area because each province of the Basque Country does have quite a high degree of autonomy, meaning the rules can differ quite significantly, in fact, even within the same region. So if an expatriate is living in Bilbao, they may face very different tax thresholds and allowances to another person living in, say, San Sebastian. So in practice, it can create quite meaningful differences in the overall tax exposure for high net worth individuals, even if you're only moving within short geographical distances. However, it also creates some really interesting planning opportunities. So, particular for expats that do have significant investment assets or succession tax considerations.
And finally, the Valencian community, one of the most popular regions with British expats, particularly along the Costa Blanca. The wealth tax exemption was recently raised to just 1 million euros. But what other regional rules should expats settling there be aware of beyond just the headline?
This region, so I personally live in this region and have done since 2014, and we have seen an abundance of changes for the positive over the years, which is really great. It does certainly remain one of the region's most popular for expatriates because I think it just combines a combination of things such as favorable climate, strong international communities and infrastructure, also a relatively attractive tax environment now. So, whilst the increased wealth tax allowance is very positive, you still need to consider other regional taxes as well, such as succession tax, which is also now very favorable in recent years. But also property purchase taxes and how your investments and pensions will be taxed within the overall Spanish framework. So, I think with this, the key point is moving to Spain isn't just about where you live. It's about ensuring your financial affairs are structured correctly for Spanish residency from the very outset.
Yeah, and it's really interesting, and this has sort of brought things more to light as well today. Is whenever I talk to people about moving to Spain, they'll say I want to move to Costa del Sol or Murcia or whatever. It's rare that they'll bring up about tax and inheritance tax and all of that as well, but it is such an important part of the journey. So I think hopefully this will give people a bit more insight into what they need to be thinking about. Well, Nicole, that was a whirlwind. We've gone through 17 regions with 17 questions. And as we sort of said all along the way, we've only really scratched the surface of each one. What stands out for me is just how varied the financial landscape is across Spain. Two expats with identical circumstances could end up with a very different tax position depending on which region they choose to live in.
Absolutely. And there's so many differences between each region, even if it sounds similar in some cases, underneath, there's a lot more complexity and nuances region to region and within even some of the regions which we've talked about. So I think each of the region does of the 17 regions do have advantages and disadvantages, both from a structural perspective and certainly from a fiscal perspective as well. Some regions are quite favorable for inheritance, wealth tax, or property taxes, and others do have higher than average rates of taxes, which can catch expatriates out if they haven't planned appropriately, I think. Um, Also, the national framework, including things like solidarity tax and the UK and Spain double taxation agreement, you need to consider how that interacts into the whole piece. So I'm often asked, well, which is the best region from a tax point of view? Where should I live? I'm really tax sensitive. There is only the region that fits your personal circumstances. So your personal situation, your assets, your income profile, and of course, your objectives and longer term financial goals. And that's why every conversation that we have with a new client will start with their personal situation because there is no off the shelf or generic recommendation, which you can clearly see because of how varied each of the regions of Spain is from a tax and fiscal perspective.
Yeah, no, it's a great point, and we've done previous webinars together before, and we've often said, this is why the financial planning in advance, knowing about the different regions is so important. But also staying in touch with, with yourselves once they've moved over, because as you rightly said, things are changing all the time. So year to year, the taxes could change, and you need to make sure you're not being caught out or see of ways that you can maybe take advantage of that as well. Well, look, that wraps up things really nicely. If anything in this conversation has made you think about your own position, or you simply want to understand how the region you are considering actually affects your finances, the next step is a conversation with Chase Buchanan. Chase Buchanan offers a free introductory meeting with one of their qualified advisors. Nicole and her colleagues work with expats across all 17 regions of Spain and understand how the rules actually play out in practice, not just on paper. You can book an appointment directly at chasebuchanan.com/book. Details are in the description below. Nicole, thank you. That was a fascinating tour of Spain. Any final thoughts before we let you go?
Thanks very much. It was a whirlwind. I would say my final thought would be don't let tax dictate your life choices. Move to the region that you prefer from a lifestyle perspective. And just be aware of the tax differences and plan around them by having the right advice before you move to Spain.
Great advice. No. Well, thanks for joining us, Nicole. And if anybody has any questions, please get in touch via the forms on this page. Thank you very much.
Thanks.